Hello, guys, and welcome to the show. Boy, gosh, I got a lot to talk about this morning. Today is Tuesday, March 16th, 2019, and I'll tell you, first thing, I'm going to talk about a couple things, yield curve inversion, and then I'm going to talk about Brexit. I'm going to sort it out for you guys, what happened. They threw us a twist. They threw us a curveball with Parliament taking control. We're going to get right into it, and we're going to open up the charts right here, and we're going to take a look at what's going on. First thing is the yield curve has crashed big time, and basically the yield is plunging below Fed funds with the 3-month and 10-year in free fall. And what is the outlook to all of this? I mean, what does it all mean? Basically, I'll highlight it for you right here in blue. It says, meanwhile, the Fed's favorite recession indicator, the spread between the 3-month bill and the 10-year Treasury, has plunged further into negative territory, and at last check it dropped as low as 7 basis points. As the next U.S. recession is now barreling toward the United States. Okay? That's basically the outlook of this yield curve inversion. Now, at the same time, what we have is the stock market trying to make all new highs. I mean, it's up today. It's going to be up. We're going to get into that in just a minute, but I want to sort out Brexit for you right now. Now, this article is by somebody who knows really A-level in politics, the person who wrote this article. And they're sorting it all out for you so that they can make you understand what just happened. It says, this morning, after MPs voted for a cross-party amendment to allow MPs to take back control of the Commons and table their own Brexit amendments tomorrow. So, Wednesday, tomorrow. These MPs that just took control. I mean, all the newspaper articles out there right now and all the articles in the mainstream media says that the MPs have taken control of the whole process, and basically people think, oh, well, we can breathe a sigh of relief now because the MPs have control and they'll save us from this Brexit. Well, this person right here that wrote this article knows a lot about politics. A-level in politics, and they're sorting it out for us. And this happens to be probably not really the case. Yes, the MPs will vote on many different options. It says here, indicative votes are free votes where MPs will vote on many different options to see if one will have a majority. MPs will be able to propose an option. This sounds great. They could propose not to leave the European Union, or they could propose to basically get rid of Article 50 altogether, just push it off the table and get rid of it, or any option they want, they can vote on. It says, but once it is rejected an option, in other words, once the MPs vote on it, it cannot be voted on again. It says, the verdict of these votes is not legally binding. Uh-oh. Well, when we hear that MPs just took control, all of a sudden we think, hey, their verdicts are going to be legally binding. Hey, this is a big one right here. It says the verdicts of these votes are not legally binding. Well, what are they then, if they're not legally binding? It says, however, Theresa May essentially said yesterday that if she doesn't agree with the verdicts, in other words, these verdicts are votes that the MPs vote for, if she doesn't agree with them, the amendment will not be carried out. So basically, what are they doing? They're going to be doing all this voting on these amendments and stuff, and they'll probably pass one, and they're going to have to put it before Theresa May's desk. And what does it say here very clearly? It says, if she doesn't agree with the verdict, the amendment will not be carried out. It says, this is meant to be a way to get us out of a deadlock that we are in. But this person that has this degree says, I'm not sure it will meet its purpose, especially given May saying that she was skeptical about the process and her willingness to comply with it. So now, if we move back in history, do we have any precedent for this happening before? And the answer is yes. It says the last indicative votes that took place were before I was even born. Now, this is a person that was writing this. On the issue of the Lord's Reform in 2003. So this person is not real old, but they're an expert in politics. It says the youngest person in the world with an A level in politics. So they're explaining it to us. And it's not quite what we think, evidently. It says the last indicative votes that took place were before I was even born on the issue of the Lord's Reform in 2003. It says not a single one of the 7 options presented was passed. So evidently these options come to the Prime Minister, and they decide whether they're going to pass or not. So it goes on here. It says not a single one of the 7 options presented was passed, meaning that the reforms did not go through and everyone was back where they started. And she says, or he says, I would not be surprised if the same thing happened again this week and the results are not binding. So what is the point? So it seems like this whole thing is just going to waste precious days leading up to the 12th of next month, when Article 50 is going to snap, boom, bang, hard Brexit. So this is pushing us actually further toward a hard Brexit than we were before. It says we have 17 days until then. And we do not have an agreed deal. We do not have the means for an extension. The EU says that we need to have an agreed deal in order to have a short extension that May has proposed. Even if they are irrelevant, we haven't achieved anything in 3 years, let alone in 2 months. And instead of trying to reach a compromise, senior Tories are trying to oust their leader. She said, he or she says, I do not like May in the slightest, but even I think the new Tory leader would be ludicrous at this current time. And they go on. Basically, they go on, and their conclusion is that we've moved closer than ever toward a hard Brexit at this point. Okay, so now let's move into the markets today and get into the meat of the story, and we're going to take a look at the silver price, which is bumbling along at basically $15.44, down 7 cents on the day so far. Now let's take a look at gold. Gold's at $1,316. It's starting to rise, though. It's down $5.40, but it is starting to rise right now. It's on the uptick, and silver will follow. Silver always follows gold. Now I'm going to tell you what, guys. This hard Brexit is looming closer and closer. And at a certain point, I think it's going to shock the markets. The markets are higher than they should be because of corporate earnings and stuff. They've come in and the corporations have bought up their own stock, and they've pumped the market up higher than it should be right now. So the market is poised where it could fall off sharply, big time, right? And we got this hard Brexit coming, which could push it over the edge. So we've really got to watch for this. Now let's take a look at cryptocurrencies today. Cryptocurrencies today are $38.93, and they endured a fall in price that came yesterday. Here's the thing about this. I was sort of expecting this fall. I was giving it a 50-50 chance of actually happening, and lo and behold, that 50% revealed itself, and here it is. The bears are still in action on cryptocurrency, but what I notice is the bears have lost a lot of energy. They don't have the power. They're getting exhausted now at this point, but they're still working at it, you know. So we got to keep our eye on this. I don't see it going anymore at this point. I don't see it going down into the $2,000 ranges anymore, like I did a few weeks ago. I'm starting to think now that we're reaching the end of the line of this bear market, and you know, cryptocurrencies eventually going to go into a bull market again. Let's take a look at cryptocurrency market capitalizations. And what we're looking here at is 136.8 billion. Bitcoin dominance of 50.8%. And the coins are moving down this morning in price. See Litecoin at $58.63. So Litecoin is holding up fairly strong, up near 60 bucks. Ethereum 134. XRP is still 30 cents. We're looking at Bitcoin Cash at 157. Binance Coin at $15.97. EOS at $3.94. And those are your coins for the day. Now, let's take a look at the pre-market data. And what we see is the market is showing that the futures is up like 122 points on the Dow. So we're probably going to have a positive day. We're having these positive days, you know, leading up. So the market is basically rallying, leading up towards something that they're not expecting at all. They're all sitting back there thinking to themselves, hey, you know, this whole Brexit thing is going to pass away. And now that the Parliament's taken control, they think, okay, this is it. This is the end of Brexit. You know, little do they know what's coming. Okay, so now let's take a look at the price of oil today. $59.81, and she's up today. She's up 99 cents, 1.68. So that's quite a big leap in the price of oil today. This oil has been going up and up steadily ever since it reached its bottom at $43.93. It's getting up almost to 60 bucks, guys. It's starting to get into some higher priced oil, you know, quite seriously. Now let's take a look at bonds and rates. We got our inverted yield curve, and today a little bit of pressure's coming off of the yield curve, it seems, but not very much. We got the yields rising, basically 2 basis points, or a little bit over 2 basis points on the longer end of the yield curve, and the short end is falling just a little bit, but it's only marginal. So now let's take a look at the US dollar index. And we're looking at a rising dollar today. 96.70. It's not rising a lot, but it's getting back up near 97 again. This generally has a negative effect for gold and silver, but at the same time, as we got the U.S. dollar index rising, look at what we got. We got the price of gold rising right now too. A little bit of an unusual circumstance. Listen. Thank you guys for listening to this market report. Stay tuned. I'm going to keep you up to date as much as I can on the Brexit. I think this is going to turn out to be something that they're not expecting at all in the markets. I think it's going to smack hard when it comes, you know, and because they're not expecting it at all. The result that I think's happening, which is going to be a hard Brexit, and only about 2 weeks from now. I mean, and nobody expecting it. It could cause a crash in the markets, quite seriously. And I remember last time it happened, not meaning that this will happen again exactly this time like it did last time, but last time it shot the prices of gold and silver upwards, and I mean they went straight up on the vote for a hard Brexit. So it doesn't necessarily mean that it has to be the same results. But let's not forget about Basel III. They've opened the doors now for banks to use gold as a Tier 1 asset. And this is absolutely huge. This is setting it up. This is setting up something that we could never imagine. Basically what it amounts to is a transfer of wealth from the paper assets, which is the fiat currencies, into gold, a transfer of wealth. And of course the banks will be ahead of the curve. Aren't they always ahead of the curve? Don't they always get everything, and we get don't they always get the big steak and we get the old bone? You know, isn't that always the way it is? Thank you guys for listening. Like and subscribe. Give me a thumbs up, and we'll see you guys in the next video. Bye bye, guys.